Welcome to the deep dive. Today we are cracking open the vault of one of India's largest public sector banks, Punjab National Bank, or PNB.
Mm,
We've got a really fascinating and, frankly, sort of contradictory stack of sources here. We're synthesizing their stellar Q1 financial results from back in July 2025 with some pretty highly charged operational updates from just this month, October.
right. And that synthesis is really the core of what we're doing today. Our mission, if you like, is to move past those simple headlines. Because PNB is presenting, well, a fascinating paradox right now.
The paradox. How so?
Well, on one hand, they're showing really successful financial stabilization, cleaning up, mountains of bad debt. But on the other, they just reported a massive drop in net profit.
Okay.
And get this, their officers actually went on strike demanding protection against what they're calling digital arrest.
Digital arrest. Wow. Okay, so that dual narrative is really the core tension here then. We need to figure out which story is, well, the real one. Let's unpack this, maybe starting with the big financial success PNB's had in cleaning up its balance sheet. That dramatic improvement in asset quality.
Yeah, absolutely. That cleanup job has been pretty spectacular.
You really think so?
It truly has. I mean, if you look at the non-performing assets, the NPAs, the sheer scale of the turnaround is what really stands out. Their gross NPA percentage dropped significantly,
How much are we talking?
down 120 basis points year over year. It hit 3.78% in Q1 FY26. And, just to grasp the scale of effort, they've resolved nearly 9,000 crore in bad loans over the last year alone.
9,000 crore. That's huge. And the net picture, the net NPA, that looks even stronger, right? It suggests they have a better handle on new risks, maybe.
Exactly. Net NPA percentage is now sitting at an extremely low 0.38%.
0.38%. Wow. So how confident should we be that this is, sustainable, a real defense against future risks?
I'd say very confident, actually, because they're backing this up with solid provisioning. Their provision coverage ratio, the PCR, including technical write-offs,
Yeah.
is holding strong at 96.88%.
Okay, and PCR, that basically measures how much they've set aside to cover those bad loans?
Precisely, and near 97% is an exceptionally strong defense. What's equally impressive is how they dealt with the riskiest assets.
Ah, you're talking about those high-risk accounts tied up in the bankruptcy system, the NCLT stuff.
Exactly. Their total exposure to NCLT admitted accounts, that's the National Company Law Tribunal, basically the courts for high-risk corporate debt, it's substantial. But crucially, that entire amount is provisioned at 99.82%.
99.8% provisioned. Okay.
Yeah. They know where the risks are, and they've covered them almost completely. It really seems the big historical corporate problems are largely, ring-fenced now.
That's definitely reassuring on the legacy side of things. But if we look a bit closer at where the remaining issues might lie, the risk distribution, well, it tells us where PNB needs to keep an eye out, doesn't it? Where are those remaining hotspots?
Yeah, the sectoral distribution is quite clear. Corporate and overseas segments are exceptionally clean now, with an NPA percentage around 0.30%.
Very low.
Very low. However, the bank still carries higher percentages in key segments they support, often for, social mandate reasons. Agriculture is at 10.77%, and MSME is at 11.31%.
Okay, still double digits then.
Still double digits. Now, while these numbers are improving, they do show where the bank's ongoing monitoring efforts really need to be focused. Even as their overall rate of new bad loans, the slippage ratio is looking pretty good, under control at 0.71% annualized.
Right. Okay, so moving from that cleanup phase to, well, strategic growth.
Hmm.
PNB isn't just fixing the past. They seem to be investing heavily in the future, too. They hit a huge global business milestone, didn't they? Over 27 lakh crore in Q1. That's an 11.6% jump year over year. Why is PNB leaning so heavily into the retail, agriculture, and MSME space now? Is it like a conscious move away from their corporate debt history?
I think that's precisely the strategy. Their stated target is ambitious, hit 30 lakh crore in total business by the end of this financial year.
30 lakh crore?
Yeah, and they clearly want to achieve that by dramatically shifting the lending portfolio away from those large, concentrated corporate risks that, well, caused the past NPA issues. This growth is being fueled by strong advances and deposits. Global advances grew nearly 10%, 9.8%.
And the structural shift has a name, right? This
Yep.
RAM acronym.
Yes. RAM stands for Retail, Agriculture, and MSME. And PNB's focus here seems relentless. RAM advances grew at 11.8% year over year.
Okay.
And this segment now makes up over 56% of their total domestic advances. Within that, Core retail advances showed particularly robust growth, up 17.7%.
17.7% in core retail. That's where the strategy really seems to shine through. You can almost see the consumer confidence there. Specifically, the sources highlight things like vehicle loans.
Big jump there.
Yeah, surged by 25.3%. And home loans jumped 16.6% year over year. Feels like a very deliberate push into less risky, maybe higher volume retail lending.
Well, it definitely creates a far healthier risk profile for the bank. It stabilizes their interest income and, crucially, reduces their exposure to those single large shocks that can happen with big corporate accounts.
All right, now for the part that requires us to be really careful with the numbers, profitability. The operating profit narrative looks great, right? Up 7.6%.
Yep.
Profit before tax, PBT, also increased by a robust 28.3%. So financially on the surface, they seem to be making more money than ever.
Okay, here's where it gets really interesting, and where that financial success narrative takes that sharp turn we mentioned right at the start.
The paradox again.
Exactly. If you look at the bottom line net profit, it actually fell sharply, down 48.5% year over year to just 1,675 crore.
Wait, 48.5% down? That's a huge contradiction. How does PBT jump nearly 30% while net profit falls almost 50%? I mean, that sounds like a fundamental failure somewhere, yet we just established the core business seems strong.
It does seem odd, but it's not a failure of core operations. It's actually a strategic, elective accounting decision. The entire divergence boils down to PNB's decision to opt for new tax regime.
The new tax regime. Okay.
This switch caused their provision for income tax to jump massively. I mean, from about 2,000 crore last year to a staggering 5,083 crore this quarter alone.
5,000 crore in tax provision for one quarter.
Wow.
Okay, so this sudden drop in net profit is really just an artificial distortion. It's an accounting outcome of front-loading a huge tax hit, not like bad business or poor recovery rates.
Precisely. It's essentially a kind of financial reset for future tax benefits down the line.
I see.
And if we connect this to the bigger picture, it explains why key ratios like return on assets and return on equity look, well, temporarily depressed this quarter. Those figures dropped because of that income tax provisioning. The operational foundation looks solid, but the reported net profit is definitely distorted by this one-time decision to switch tax regimes.
That's a really crucial insight for anyone listening who's trying to evaluate the bank. Core finance is strong, reported bottom line artificially depressed. Okay. Now, this push for efficiency and modernization, the thing that probably motivated the tax decision and definitely the RAM strategy, it's clearly impacting the people inside the bank too. Let's pivot hard now to the operational reality on the ground in October.
Yeah, the transition from that boardroom strategy to the, let's say, branch reality does seem a bit jarring. In October 2025, we saw some major friction, really symbolized by that one-day officer strike.
Right, organized by the All India PNB Officers Federation.
And it raises an important question, I think, about the human cost of driving efficiency so hard.
And the specific demands are extremely telling, aren't they? They suggest a high-pressure, rapidly changing environment. They wanted better compensation mechanisms like 100% perquisite tax reimbursement, medical aid linked to the new basic pay.
Standard demands in some ways.
True, but the demand that really jumps out is their opposition to what they specifically termed digital arrest after work hours.
That phrase, digital arrest, it just speaks volumes, doesn't it? It's about the expectations of constant digital availability that seem to come with this rapid tech adoption in banking.
Yeah.
Employees are clearly resisting that blurred line between work and home life, and they're using that specific term to push back against the pervasive drive for 247 efficiency.
Meanwhile, PNB is also pushing efficiency gains on the customer-facing side, adjusting its cost structures from October 1st. What stood out in the new service charges?
Well, we saw some pretty significant increases in locker rentals, varying based on branch size and location. They also revised fees for things like standing instruction failures and nomination services.
Standard stuff for banks looking to boost non-interest income, I suppose.
It is pretty standard, yeah. Shifting costs, increasing fee income. But it definitely adds to the overall friction when combined with everything else.
And the aggressive NPA cleanup continues in the background, showing they aren't letting up on asset recovery either.
No, they're strategically managing those assets. Just this October, PNB announced plans to sell over 100 non-performing asset accounts, valued somewhere between 4,000 and 5,000 crore to asset reconstruction companies, ARCs.
Okay.
And they're targeting a pretty healthy recovery rate on those sales, maybe 40 to 50%. It just shows that the NPA cleanup isn't a one-off project. It's now a permanent, aggressive operational fixture.
Right. And this brings us back full circle, doesn't it? Back to the heart of that tension. The digital push that seems to be causing the digital arrest friction. PNB is clearly accelerating its transformation using some pretty cutting-edge tech.
Oh, absolutely. The digital adoption numbers are impressive, and you can see why the employees might be feeling the pressure. WhatsApp banking users, for example, nearly doubled year over year, hitting almost 70 lakhs.
70 lakhs on WhatsApp banking.
Yeah. And UPI transactions through their main app, PNB One, also basically doubled in the quarter, reaching over 100 lakhs. Crucially, digital transactions now account for, get this, 95.67% of their total transactions.
Wow, 95%. The physical branch really is rapidly becoming, well, less central.
Less central, exactly. And they're diving headfirst into generative AI to drive even further efficiency.
Generative AI, what are they planning there?
Well, the sources mention plans for implementing Gen AI across the organization. They're launching RIEE, that's a Gen AI-powered internal chatbot for employees,
Okay.
and PIECHU, which is the Gen AI-powered customer chatbot. Plus, they're revamping all their core digital services like PNB One and their internet banking.
And this massive overhaul seems to be formalized through something called Project U-Dollar, an HR transformation effort.
That's right. Project UDIN is designed to essentially future-proof the workforce. It involves implementing a next-gen appraisal framework, doing peer benchmarking, and even launching a Gen AI HR learning chatbot.
Okay.
They're clearly seeking to increase performance and accountability across the board. But this level of transformation inevitably creates internal strain, which leads us right back to that employee strike and the opposition to constant digital accessibility.
So we have the complete picture now, more or less. How do these Q1 results actually measure up against their own stated goals for the whole year for FY26?
Well, the operational targets show a bit of a mixed bag, success and perhaps some modesty. The bank is slightly behind on targets like credit growth. They hit 9.84% actual versus an 11-12% target, and also slightly behind on net interest income growth. But on the flip side, they're comfortably ahead on their asset quality targets. For instance, their credit cost is just 0.14%, which is excellent,
Yeah.
well below their target of keeping it below 0.5%. So the foundation looks sound, but maybe the growth velocity is just slightly modest compared to their ambition.
Right. So wrapping this all up, what does this mean for you, the listener? Well, PNB is clearly demonstrating fundamental financial strength. That's led by a massive asset quality cleanup and strong, strategically targeted retail growth. But its immediate profitability, that net profit figure, was substantially altered by that strategic shift to the new tax regime, resulting in that huge quarterly drop we discussed.
Yeah, a crucial point to remember.
And all of this is happening while the bank navigates some pretty intense employee dissatisfaction, particularly over work boundaries, during a period of really relentless technological adoption.
And the market has certainly seemed to look past that short-term tax impact, hasn't it? PNB stock has shown a massive 225.77% surge over the last 3 years. It was trading above 115 in mid-October. Investors are clearly focused on the long-term structural story, that asset quality turnaround.
Definitely. So I think the most important question for you to ponder after synthesizing all this data really comes down to that central tension we identified, the one between machine and person. The bank is pushing Gen AI, massive digital efficiency gains, all for competitive advantage, obviously. But that high-speed digitalization is running directly into human resistance, symbolized perfectly by that digital arrest demand and the employee strike.
Yeah.
So how effectively can PNB or any large bank really pursue these high-speed digitalization and efficiency gains while simultaneously managing the human cost and maintaining positive employee relationships? What does PNB's experience tell us about the future balance between technology and welfare in the modern financial sector?
That's the tightrope, isn't it?
It really is. And it's the balance every major institution is going to have to strike in the coming years.